Hello and welcome to our channel. I thank you guys for tuning in. Today's lesson is going to be on head and shoulders. Head and shoulders is very important to me. This was the first thing, so this is near and dear to my heart. When I was actually starting trading quite some time ago, head and shoulders was the first thing that I've ever learned. So let me share my screen real quick. So this is the beginning of head and shoulders. So I'm going to explain head and shoulders. To me, this is one of the most simple ways to trade, to do head and shoulders. It's not too complicated. So it's very easy to learn. Like I said, the first thing I ever learned was head and shoulders. So let's go over what head and shoulders actually means right now. So head and shoulders is exactly what it means. We have our left shoulder, we have our right shoulder, we have our head. So basically we're going to have a bullish pattern when it's coming up here. So basically buyers are in control here. It's going to come up to a point. So the peak of this point right over here, and then it's going to come down. This across this line over here is called the neckline. So it's going to now come up to the highest point that it's going to go to. Then it's going to come down again to the neckline, and then it's going to come up and make another shoulder and come down. So this is the right shoulder. So this is a reversal pattern. So every time you see a typical head and shoulders pattern, this will let you know that this market is about to reverse. So we're going to have the sellers take over. It comes down, makes a new higher low, comes up to a new higher high, comes down to a higher low, makes a very small higher high, which is going to even out the shoulders, and then it's going to make its way back down. Remember, market likes to repeat itself, and it likes to come back down. Whatever happens on the left shoulder wants to happen on the right shoulder. So whatever happens on the left side of the market is going to also happen to the right side of the market. That is the rule of thumb. The case in point, if you watched my videos before, I like to use the banana scenario. So basically a banana can't be worth $45. Nobody's going to ever buy a banana at $45. So banana is probably going to be 89 cents sometimes, and that's what we have over here, 89 cents. Then it comes up to $1, comes down to 90 cents, comes up to $1.25, comes back down to 90 cents, comes back up to $1, and then it's going to drop down to 89 cents. It can't be worth nothing, so it can't go down to 5 cents, because then the banana industry would go out of business. So that's pretty much how the market goes. It's going to kind of roughly stay around the same area. So if market's making a push up, no, sooner or later, market needs to make a push down. So this is, once again, our head and shoulders pattern. So watch, we have our left up and down, head down, right shoulder down. Take a look, guys. Now we have the standard head and shoulders, which is going to come right now from, we have a bullish move here. So we have our high, then we come down to our higher low, come back up to our higher high, come down to a higher low, come up to our new higher high, come down to a higher low, come back up to a higher high, then we're going to come back down. We're going to now form the left shoulder, we're going to form the head, and then we're going to form the right shoulder, and then market is going to start coming down. So this is a reversal pattern indication right now. So once we see a head and shoulders, a standard head and shoulders, we know that market wants to now reverse. This is an inverted head and shoulders, which is the opposite of obviously the regular head and shoulders. So when you have an inverted head and shoulders, we know that market wants to now push up. So we're going to have our starting point. We come down to a low, come up to a higher low, come down to a higher, a lower low, up to a higher low, down to this new lower low to form the head, come up. We have our neckline. We have our right shoulders that's going to form, and now the market is going to have a breakout up to the top. So head and shoulders is a nice way to see where breakouts are going to happen. So we have the neckline, we have the shoulder line, and then we have the head. So a lot of people want to know, how do we trade this? But this not hard at all. So let's just take a quick look. I'm going to zoom that in for you guys. Take a look what the inverted head and shoulders looks like. Very good, guys. Let's go back a few. And let's look at, that's the standard head and shoulders. Once again, that starts from a bullish move. Then we have our standard head and shoulders, neckline, shoulder line, head, and we're going to make our way back down. Inverted shoulders are going to be underneath. So we have our left shoulder, right shoulder, the head is going to be the lowest point. And then we have our neckline, and then we're going to make a move back up. So now how do we trade this now? Okay, so now let's take a look now. So this would be an inverted head and shoulders pattern. So we come down, we're going to make the left shoulder come up, come back down, make the head, come back up, come back down, make the right shoulder, and then come up here. Now, some people like to enter in on this area right here, thinking that it's already completed the move and now it's going to start making its way back up. Me personally, I don't like entering in on the shoulders. I know some people that do like to enter in on the shoulders, but me personally, I don't like to enter in on the shoulders. But you can enter in on the shoulders if that's what you want to do. So to me, it's a little riskier and you don't really secure the move because you don't know if the right shoulder is going to dip a little lower, come up. Like I said, I like to see more indication that this market is coming up. So this is what I prefer to do. So we have the nice momentum coming down. We have our up to the neck, down to the head, back up to the neck, down, making the right shoulder, coming up. Now we've passed the neckline. We have a new candle forming. That's going to be a green candle. I like to enter in right here. This is where I like to enter. So it's above the neckline and then coming up. So now how would we set this up? Well, like I said, the neckline is across here. We have our entry here. We have our stop loss underneath the right shoulder. So now basically what you have to know is that if this market does pull back or have a retracement means that the market is going to come back, retest this area, and then push back up. You might make sure that your account can handle this pullback. So some people put their stop losses right underneath the right shoulder before the move comes up. So you have your entry right here, and then your take profit will be just slightly above it. This is a nice safe trade. We're going to have the stop loss just below the right shoulder. This is good for small accounts. So if you have a small account, $100, $300, $500, this is a good setup for you. Now, where do we take our profits? Well, a lot of times I like to look over to the left side of the field. Remember what I said, anything that happens on the left side is going to happen on the right. So if on the right side is making a move, it's normally going to follow the move here. That's not a guarantee, but a lot of times that happens to be the rule of thumb. Like I said, with the banana, market started at 89 cents, market returned down to 89 cents, market came up to $1.25, market may want to come back up to $1.25. So guess what I'm looking for the market to do? Come back up to the $1.25 over here. Like I said, these are just numbers that I'm just throwing out for you guys to just say what I'm looking for. So I come in with my entry at the neckline. I'm going to put my stop loss right underneath the right shoulder. And then I'm looking to right here, just even out the line to put my take profit line. So this to me is a solid setup for the head and shoulders pattern. So this is very well for us. So we're going to be looking to set this up. So take a look at this, guys, for a second. Let me explain it one more time. We have market came up, market pushed down, push down, push down, push down. Market came up, market pushed down, push down, push down, made this last lower low. And now we come up to the right shoulder now, and now it's starting to come up. And then guess what? Market came down again. And then market decided to start pushing up. Once we start seeing market push up, this is where we want to come in with our entry. Okay, and then where do we want to end it? Well, we're going to look over to the left of the side of the shoulder where it started, the pattern started, and this is a nice safe place for us to take our profits. Okay, we put our stop loss right underneath the shoulders, and then we have our head. So now those of you guys that are a little more experienced or have bigger accounts, this is how I personally would set this up. I have my entry line, which hasn't stopped. It's always been at the neckline. And now I'm going to have my stop loss, which is going to be underneath the head. If you happen to have the market push back underneath the head, guess what? You are wrong. Okay, I believe that if this market is going to push all the way down past the head and make a new lower low, and the lowest point of this market is now below your head, or if it was in the other direction above your head, you are wrong and you need to get out of this trade. That is my personal opinion. So I'm going to put my entry here on the neckline. I'm going to put my take profit according to how far it went over here, the start of this push. And then I'm going to watch for the retest, because sometimes it will retest the shoulders before it comes back up. That means market's going to push down, bounce off of this support, and then market's going to push up. And then, like I said, to me personally, if it comes down below this headline, if market comes down below this head, you need to get out of this trade. You are wrong. Whatever your setup was supposed to be is not what it's looking for. You just got violated. This to me also too is what I would like to enter in. So I do see the neckline over here. The market's going to push up. I might have missed it. And then I'm going to look for the retracement to come down and then bounce off of this neckline. And then I'm going to enter and then start pushing my way up. This is very common. I see retracements come down to the neckline. I actually see retracements come all the way down to the shoulder line. My personal opinion, if your retracement comes all the way down to the head or goes past it, you should get out of this market. So this is very common to come down to the neckline and then get in an entry and then bounce back up. So it's also very common for me to see it come all the way down to the shoulder and then bounce back up. So you can also enter down here. That's up to you and preference. I like to enter it on the neckline, wasn't too big on the shoulder line. Take a look at this real quick. Awesome job, guys. So now let's take a look at some examples of head and shoulders. This is pretty standard head and shoulders. You see our left shoulder here. We see our head come back down. We see our right shoulder, and then market did what? Market started to come back down. Market made a big push over here. Guess where market returned to? Market returned to the side. Like I said, normally wherever market starts, market will finish. So market came over here, like I said, 89 cents banana, 89 cents here, came all the way up here to $1.25, pushed all the way back down to 89 cents again. And this is where market wants to return to. So like I said, left shoulder up, comes down, head comes down, right shoulder down. This line over here is representing our shoulder line. This line over here is representing our neckline. This did push close to the shoulder line, but not exactly as high. So you could have entered in on here and been perfectly fine. Took a little bit of a pullback, and then we dropped down here to profit. Took a little bit more of a pullback, and then guess what? Dropped down. If you took this ride all the way, you made a good investment. Market's pushing down. So now let's take a look at this in the opposite direction. This is an inverted head and shoulders. So guess what? We made our left shoulder, came up, made our head, which is our lowest low, came back up, came back down. Guess where we shot? Shot to the stars. We have our neckline over here. We have our shoulder line over here. Market's pushing up in a reversal. Take a look at it. Awesome work. Same thing. Same. Market came down, left shoulder, comes up, comes down, makes the head, comes up, comes down, makes another right shoulder. Guess what? This market is reversing. We pushed all the way back up. To me, it's much easier to see. The eyes can see better when you're looking for head and shoulders in the line chart. Not saying you can't see head and shoulders in the candle charts. Me personally, I always think it's easier to see it in the line chart. This is a standard head and shoulders, and guess what? Came down. This market actually retested over here, which happened to be retesting close to the what? The neckline. And then market did what? Shot down. Came back up a little bit and shot down. If you took this ride all the way down, you made some good money. So like I told you, it's not uncommon for it to retest the neck. That was the retracement that we saw before. Came down, retraced the neck, could have entered in here, and then started riding it down. Market's in a downward trending motion now. So let's review real quick, guys. Standard head and shoulders formation, left shoulder, head, right shoulder, neckline, shoulder line. Making a bullish move up or buyer's market, comes down, comes up, comes down, comes up, comes down. We have our higher high, higher low, higher high, higher low, new higher high, higher low, higher high, and then a new higher low, which is evens out, makes a neckline, makes a new higher high, which is even right here. Technically, this would be a new higher low because now we're coming in a downward trend. Inverted shoulders, just a reverse. Everything has a mirror. This happens to be the mirror of the head and shoulders. This is an inverse head and shoulders. We have our starting point. We have our higher low, our low. We have our higher low. We have our lower low. We make a higher low, come down to our new lower low, come up to a higher low, come down to now this would be a new higher high, and sorry, higher low, and then we're going to shoot up. Sorry, sometimes I confuse higher, not confused, but it's just wordplay and a little tricky. So I do apologize if I'm a little confused, confuse people on this. So when we're moving down, we have higher highs and higher lows, and then we have lower lows and lower highs when we're coming down. And see, look, I even reversed that. When we're coming down, we have our lower lows and higher lows. When we're coming up, we have our higher highs and our higher lows. Okay, coming down, lower lows, lower highs, coming up, higher highs, higher lows. See, I could be a little tricky on the wordplay. Try to say that 5 times fast. Where can you enter? You can enter in on the shoulder line. Okay, I don't like to enter in on the shoulder line, but you can enter in on the shoulder line, especially if you get a retracement down to the shoulder line. I like to enter in over here, which is at the neckline. Right above the neckline here, we have a nice solid candle. Green candle is starting. I'd probably enter in right around here, ride the candle up. How far would I ride? Well, this is a setup. We have our entry here, right above the neck, just a little bit, or at the neck. And then we're going to take our profits right here. And then we have our stop loss right below the shoulder. This is good for small accounts. One more time. We entered in on the shoulder, on the neck, sorry, entered in on the neck, rode up for the profits. The profits were even to the left side of the market. And then our stop loss is right below the shoulder line. Remember, if it comes down to the head, my personal belief, you are completely wrong. Not down to the head, but at least past the head. Once again, if you've passed this headline and you broke this line of support, I believe you are completely wrong. You need to get out of this market. If you want your stop loss to be lower down, perfectly fine. But if you break the head, I don't think it's going to be bouncing back. And if it does, it's probably not going to bounce back pretty far. And you might not see this area again. It's best to get out. Entry, take profit would be even to the side over here. Stop loss below the head. Retracement is a good way. Retracement means that market comes back down, just testing out this area over here and comes out. Basically, the sellers are going to come down here. Buyers are going to be like, nope, hell no, we're taking back control and bounce off of that last line of support. Also, most people will see this come over here, know that this is a strong line of support and start pushing the buys to come in. Buyers will start taking over and we're going to have a full reversal. Sounds great, guys. All right, so let's see if we can find some head and shoulders in the actual market. This is trader zone. So you can see I'm already on a line chart. So to see the line chart, we see we have our candles here. Come right up to this line right over here. It says candles, switch to the lines. So let's see if we can find any head and shoulders or inverted head and shoulders. Oh, I see one right there. Let's see if you guys see it. Anybody see it? I see the structure. I see it twice, actually. All right. I've never been the best at drawing inverted head and shoulders, so I do apologize while we are recording this if I mess this up. So let's try to see if I can do this live without messing up. Okay, do we see our pattern now? We have our head and shoulders right here. Let's just adjust this. Like I said, I was never the best at drawing head and shoulders. Let's push this up a little bit so we can secure this. Okay, market started right around here. Market came up to right around there. So, and then we can come down with this right over here. See? Little inverted head and shoulders up. Look, told you I wasn't the best at it. Let's close this up right there. We have a nice little head and shoulders right there pattern. See? And then what happened afterwards? Market did what? Market came down, retested. Oh, this would have been a little dangerous. It retested close to the head, not underneath the head, but it did test close to the head. So let's make our lines here. We have our line here. We have our shoulder line here. So it came, tested a little bit here. This is actually a W. So if you guys are watching my videos, I have done a video on W. So this is a W. This is another sign that the market is going to push up, but this video isn't about W's. If you guys look on my channel, you'll see things that talk about W's also too, but this is a W, which is a good indication of market coming up. Head and shoulders comes down, retested, not the head, but did come really close to it. So if you were in this market, your stop loss was underneath the head, like I showed you to put it, you would have still been good money. So let's take a look at this one more time. Let's clear all the drawings. Let's see if we see any more. Let's come across here. Let's see if we can find some just for you guys to see. All right, nothing here is cherry picked. Okay, that's a term that people use when you just kind of find something that shows exactly what you're trying to explain. So let's go to another, randomly just find another chart. As you guys can see, nothing is marked up here. I'm also on the 1 hour chart. So I like to trade off the 1 hour chart. I do have videos. Oh no, this is marked up just very long time ago. Let's remove these drawings. I don't even know how long ago I did mark that up. Let's see if we have anything here. This could be considered inverted head and shoulders. It's a little sloppy, but this could be considered it. Okay, not a big fan of this one, but for the interest of the video, see we have it right here. We have an inverted head and shoulders. Market came down, tested around the shoulder area, and then market came up. Didn't come up much though. So remember I said it's kind of sloppy. So it came down, tested around these areas, and then market did come up. Didn't come up drastically, but it did come up. Let's remove these drawings. Let's see if we see anything else. I'm trying to look for a regular head and shoulders so that you guys can see it. But like I said, typically when you're trading, I come to find that you're going to find inverted head and shoulders way more than you find regular head and shoulders. Why is that? No idea. Let's check the market for something else. This is Euro USD. Let's see. Oh wait, might have found. Nope, didn't. To me, nope. Let's keep looking. Like I said, the market does make these structures, but you gotta find them. Just gotta find them. Okay. Oh, I think let's remove these drawings. So I think we did find a regular standard head and shoulders. And I think that motion would be up here. It's sloppy, but I don't really, yeah, I wouldn't really consider it. Oh, wait. Do we have, you got to train your eyes to find these things, guys. No, I don't see any head and shoulders here. Let's try one more time. Sometimes the market don't give you what you want the market to give you. So that's why we have to have many different trading strategies so that we can find the one that is applying to the market when the market is actually giving us what we want. So nope, that would not be considered a head and shoulders. That would not be considered a head and shoulders. Well, in my opinion, it wouldn't be. So that is this is a sloppy, but it could be considered a head and shoulders. One here, one down, standard head and shoulders. One here, right shoulders, and back down. There we go. We got it right there. It's a little sloppy, but it's hard to find perfection in the market. If you're looking for perfection in the market, that's a little hard to find. But there we go. We have a standard head and shoulders. And where did the market go? Market went down. This came down. Let's mark it up. Here we have our neckline. Here we have our shoulder line. And then we have our headline right over there. This came back, not too far. Would have entered in right around the neck for the sell. Came down, came up, came down. And then if you wrote it, you made some good money right there. So let's take a look at that. Head and shoulders right there. Great job. Let's try one more, guys, before I end this video. So I think we're kind of getting the hint and kind of see how we can find these structures. Like I said, I'm not cherry picking these things. Like a lot of people will make videos and just kind of just have already what they want there. I'm generally letting you guys see how I would look in the market. Let me just clear some of these drawings here, remove these drawings, and see what we're looking for. So you can spend some time Looking in the market here. All right, I see a head and shoulders right over there, inverted. So it's a little sloppy. So yes, it's really sloppy. I wouldn't even go for that one. Let's see, do we have another head and shoulders? Also, guys, you can use a bigger timeline also too. That would be a perfect inverted head and shoulders. Look at that right there. You're not going to get much sexier than that right there. Look at that. Take a look, see if you guys can see it before I draw it up. All right, guys, let's take a look at this here. Draw it one more time for you guys. Big head right over there. Look at that. That's beautiful. You don't get much more beautiful than that. Look at that. And let's come across here. Let's draw up our necklines. Hey, our shoulders line. Look, market came down to our what? Market came down to our shoulder line. And then we bounced off of the shoulder line. Okay, that's our neckline, our shoulder line, and our headline. Guess what we did? We bounced off of that shoulder line, and then market did what? Market started making its way up, came back down to that shoulder line. That shoulder line was a very strong line. Okay, and then started making our way up. We went up, came up, made our peak right over here, and then market did what? Market started making its way down, came back up. So we could have made, if we took this whole ride over here, let's just take a quick look. Let's get our price tool right over here. If we took the whole ride, so let's just make a little line here. So this would be our starting point, come across here, and then our ending point would have been right around here. Let's see how many pips we would have actually made. Oh, that's 126 pips, man. That's a good day. That's a real good day on 126 pips. So this head and shoulders was good. It's really good. Came down. If you jumped in on this shoulder line, which was a strong line of support, then you rode it to its peak right over there. Guess what? 126 pips. Can't be upset about that. All right, guys. So that concludes this video for today. These are our head and shoulders. I showed you guys what you're looking for structure-wise. Also showed you guys the head and shoulder examples. And then we went into the live market to kind of see if we could find some head and shoulders. So we did find some head and shoulders. We found some sloppy head and shoulders. So everything is good. If you guys have any questions, hit me up in the comment section. The comment section. Perfect. There you go. It's got to correct my enunciation sometimes. And just ask me any questions that you have on head and shoulders. If you have any other videos that you like me to do, put them in the comment sections also too. I do have quite a few videos that show reversals. I have head and shoulders, M's and W's, Elliott waves. So many different videos. So once again, thank you guys. Subscribe to the video and appreciate you guys watching. Thank you and have a great day.